The person that is like on my Zoom, I'm seeing Chifu Okoli. You are Fofo on Discord, but
Yeah, I'm cheerful code.
okay, okay, okay.
I'm full
But
for
there's
so
one guy.
I'm the full
No,
guy.
no, no, no.
Yeah. Okay.
Mm.
Earlier today, a learning material was posted um, in the group where we talked about the manipulation of the Asian range, which is a really powerful tool that you can add to your arsenal as a trader. The reason being that, so basically, we know that for every single day, there's usually an objective, right? And there's a particular way in which the different sessions interact with each other, if you've ever really paid attention. So the
Yes.
Asian range is a very good pointer to how the London session often interacts with the Asian session. And if you can add that to your strategy, then you can really be on your way to getting some really amazing results. However, you have to have a system in place for how you map structure. You have to have a system in place for how you map.
Do
Yeah, your
you
timing.
mean like system like laptop?
Sorry.
Do you mean system like laptop?
Yeah.
Bro, I can't really hear you, but if you don't mind, can you mute yourself? Let me just run through this because of time. Yeah. So what was I saying? Lost my train of thought. Right. Yeah, so you have to be able to combine it with these things. Otherwise, if you try to use Asian range manipulation as a strategy in itself, you're going to have some really poor results and you're going to have a really frustrating experience. Again, I'm saying this from my own experience as well. So let's look at the most, well, not the most common, but the most common, in fact, because usually what we get with the Asian range is often a consolidation, right? That's why it's called the Asian range, because often we find that it ranges from point to point. So this is usually a time when liquidity is manufactured, right? So as a rule of thumb, we don't want to see the Asian range. When we see an Asian range and we measure the pipage, we don't want to see more than 20, 30 pips on a pair like Euro USD, right? Once you see the range, it's past 20, 30 pips, maybe we'll get into 46 pips, 50 pips, then it's not usually a range. It's usually a trending Asian session, which is another variation of the Asian session that we can get, meaning that the Asian session could also look like this, right? Where we have it trending to one particular direction. Now, when you have that situation, obviously you're going to have to approach it in a different manner. You can't approach it the same way, right? So let's talk about the manipulation of the Asian range. So, um, usually the way that I personally treat this strategy is that I wait till the open of Frankfurt, which is often by 7 a.m. Greenwich Meridian time, GMT. So what you would often get is that the low of Asia, these because while this is ranging, liquidity is being, people are taking buys here, people are taking buys here, people are taking buys here, people are taking buys here. So there's often liquidity, a lot of liquidity resting below and above the Asian range. So at the open of Frankfurt, you could see something like this where the low, all these lows are swept. Price taps into a demand zone that is of interest to you. Again, these are things that you have to combine with the strategy. You have to know how to pick out demand and supply zones that are of interest to you, that are of high probability, depending on the direction in which you're trading. Right. So price sweeps the low of Asia. It taps into this demand zone. There's a change of character. And then we have movement to the upside where the high of Asia is then swept. So the London objective of clearing liquidity on both sides and then expanding, like clearing liquidity on one side, expanding. So it's basically almost like accumulation, manipulation, distribution, right? It's like an objective. So this is a very textbook example of how the Asian range can be swept, and then we have a move to the other direction, right? And again, this is a variation where the Asian range is trending. So um, let's look at some real life examples. Obviously, when you're dealing with the
Hmm?
market, you have to understand that
Yes, I'm coming.
you don't always get textbook examples when you're dealing with the real life market, because the charts are usually choppier than just lines, right? Not choppier, but not perfect either. So let's look at a couple of examples that are as close to textbook as possible that I was able to pick out. Let's take this for example, right? So while I have a more complex system for marking structure that I used to employ for day trading and I might still employ for swinging, now I tend to keep it simpler. So if you understand what the overall higher time frame objective is and what the overall order flow is, then you could easily trade in the direction of that. So let's call this a break of structure for the purpose of this presentation, right? So here we have a break of structure, right? And usually after we have a break of structure, when we're dealing with, you know, market structure to a level of complexity that involves liquidity, usually we have in something called inducement. And this is where early traders are induced into taking positions before they are swept, a retest happens, and then we have a continuation. So if we look at this really closely, even though it's the one, if you look at this on the lower time frame, you see that you see all of these candles here, all of these candles are basically inducement. Because this is essentially a range that we're dealing with here. This is essentially a range, right? So there are buyers and sellers locked into this range right now. So they've generated liquidity on both sides. Now, if we pay close attention to what happened when this is 7 a.m. when Frankfurt opened, we can see that Frankfurt swept the low of Asia. So there was a liquidity sweep below the Asian range, and it tapped into an area of interest, which we can just take the remaining demand zone, just so we're not confused. So it tapped into an area of interest. Let's delete this. It's very confusion. It taps into an area of interest, right? And then let's look at the lower time frame. So for my change of character, I usually use 15 minutes. This is from experience as well. Anything lower than that, you can create a lot of noise. Um, so in this case, we had a 5 minute change of character, and I don't often wait for retests personally. So if we are taking this trade here, we would have targeted the high of Asia as our first take profit point. So let's call this our first take profit point. And usually I would do a 1:3. So let's call this our second take profit point. Now, if you have a different way of taking profits, perhaps you target already existing highs. Okay, so we can see that this existing high is quite close to this, sorry, the high of Asia, very close to this existing high as well. So this is a very good example of how um the manipulation of the Asian range can be a very, very vital tool. But that is not to say that you are not going to do your proper analysis and understand where you stand with structure and order flow. Then finally, before we make the webinar more interactive, let's just look at an example of a trending Asian range. you can see that it's not as common because we spent some time looking for it. But yeah, let's take a look at this. So this is an example of a trending Asian range, right? We can see again, if we measure the pips, we can see that this is 74 pips, right? So that's a proper trending Asia. And if we scale down to the lower time frame, what usually, okay, so here's a trick for multi-time frame analysis. Usually a run on a higher time frame is a trend on a lower time frame. So if we were to scale down to perhaps the 15 minute or even the 5 minute, what we would see inside this Asian range is a proper trend, right? So this is a trend in Asia, a Asian session, right? In this case, now the trending Asian session can be very tricky to trade. Personally, I have a very strict set of rules with which I engage this not so common situation. So I guess we're lucky that it's not so common because they can be very difficult to deal with. So in this particular, or complex rather, so in this particular case, we had a break of structure. Uh, so usually if we're going by basic structure mapping, usually what we get is that we might have a retest within Asia and then get a reaction. In this particular case, we had a retest still within the Asian because it's trending Asian. And we had a reaction which eventually failed. And then we had a sell. So if we were to do multi-time frame analysis, I think I remember this scenario and I think I remember why the sells were favored um, at the end of the day. But that's pretty much all I have on the Asian range. Okay, let's take a look at one more example. This is another example of trending Asia. So we have 72 pips here. Again, let me just show you what consolidating Asian range is like. Okay, so this is 31 pips. This is even a bit too wide, right? This is a perfect example, very textbook, 28 pips, right? And that's only because we had this week above, but you know, it's still within the 20 pip range that we talked about earlier. So in this particular case, we had a break of structure and we had price sweep. So sometimes the trending Asia will still conform to the textbook sweep of Asian low, and then we get a move to the upside. So it all depends on your set of rules, really, because one thing that I've come to notice, or one thing that I've learned from watching a podcast, is that when you're trading SMC, the
Few
only thing,
words of wisdom.
yes, the only thing,
Yeah, that's good.
the only thing that can really protect you are your rules, honestly, because you are engaging a market that is not certain. So
Yeah,
yeah,
man.
yeah, you have to
For
accept
real.
you're not smart
So
enough.
let me just say one thing. Let me just say one thing,
Yeah,
please.
sure.
Just one thing.
Of course.
Like today, yeah. Maybe say I fuck up, oh, but